2 weeks ago, we broke the news that the East African Bond Exchange, that's EABX, had raided the Nairobi Securities Exchange for its top talent. Mr. Terence Adembesa is now the Chief Executive Officer in the budding exchange dedicated to fixed income instruments. And we are privileged to have none other than the man himself, Terence. Glad to have you on set.
Thank you very much.
Thank you for this opportunity.
No problem.
Let's start from here, Terence. For those Kenyans who are not yet privy to this, what's EABX?
EABX is really a market organizer. To some people, it looks like an exchange. It's still yet to get a license from the regulator. So, in the course of the next quarter or so, we'll be putting an application to the regulator to operate as a market organizer and as a securities exchange. And the intention really is to, sort out, well, not really sort out, but to formalize the OTC market initially for fixed income securities.
Even over the counter?
Over the counter, yeah.
For our audience, it's just important.
Yeah, over the counter for fixed income securities.
A securities market dedicated purely to one asset class. Sometimes I look at it and I'm like, what's the thesis behind this? In a market like ours, is it viable?
I'd address it this way. A lot of people say that the bread and butter for the capital markets industry is the equities market, right? And even to some quarters, they will say it's Safaricom, right? But if you look at the numbers in terms of how much we're turning over from both a debt and an equity space, there's still so much yet to be covered. Last year, from the fixed income space, the turnover was close to 980 billion, which is barely a quarter of the local total debt, local debt of close to 4 trillion, right? In jurisdictions like Asia, you have a churn of close to 2 to 3 times the debt profile in terms of trading volumes and liquidity. So we are still, there's still a whole, depth that we need to uncover in terms of trading and making sure that the liquidity is there. Look at the equity space, right? Now we have about 1.5 trillion in institutional cash. On a daily basis, we are churning less than 1 billion. So there's room to grow the existing plain vanilla products, but then also that means that there's depth for more risk products for clients. So along the way, we initially will start with fixed income. Maybe along the way, we with support from the market, from the regulators, will introduce new products.
Okay, Terry. We've seen this model, and by this model I mean a model which essentially hives off fixed income to one exchange, if I could say, in Nigeria, for instance. I'm just curious to know, what lessons are you drawing from markets such as those, where we have the FMDQ on one hand and the Nigerian Securities Exchange on the other?
Ultimately, it comes down to support from the regulator and support and goodwill from the market participants. The Nigeria case, you find that the regulators are invested in the exchange, like the central bank there has an equities position in the exchange. I think at some point they actually chaired the board of that exchange. You find the market, has totally supported that exchange. It's been very successful in a very short time period. So the market has to agree to come on screen, to follow and abide by the rules, to support and say all our trades, all our activity, all our settlement activities will come through the exchange. And if we are able then to harness the market participants here to come on screen to support the business, then the business should do well.
Okay. EABX is still budding, and I'm just curious to understand, what are your immediate steps you're taking now as the Chief Executive Officer? I do understand there's a bit of capital raising happening. Could you just give us some more flavor into that?
So this is a startup, right? It had some seed money from Kenya bankers and from FSD Africa, which we're very, very grateful about. Part of the setup right now includes, putting together an office, recruiting a team. We have to source for a system that will integrate all other trading modules that are in the market. That will take a bit of time before we actually now put in our application to the regulator. So that's the work we're doing right now. Part of the capital raise, of course, is to ensure that we are meeting the regulatory requirements in terms of capital, but also we are meeting OPEX for the business in the next 2-3 years before we were able to break even.
Are you able to give us a sense of what quantum you're looking to raise for this?
Well, the regulatory minimum is 1 billion Kenya shillings. So we will be looking at in a range of upwards of that billion.
There is a very pervasive concern out here that banks, being the huge players in the fixed income space, want to use EABX as a platform to make the fixed income their own domicile, where they're the only game in town, if I could say. And of course, KBA issued a statement on your appointment just cementing its position and role in this. How do you respond to that?
The banks comprise close to 48-50% of the total debt, local debt portfolio, right? It doesn't necessarily mean that they could be the active ones trading, right? But there's other players that have to be put into consideration, right? So the idea is to ensure that you have across all the trading desks, whether it's from a banking space or from an investment bank or stockbroker space, that you have the market transparency, you have an efficient clearing and settlement for both pre-trade, trade, and post-trade, right? And that's not to say that that is going to favor some players and not others. No. The idea is, how do we ensure that you have the transparency in the market, you have an efficient pre and post-trade settlement and trading process, and all the market players who are involved then are happy. So we have all these interests to take care of as we launch this exchange.
Okay, and just still on that point, maybe this might not be existent yet, but what do you see as some of the prerequisites or requirements for other traders now to come and participate in the EABX?
Of course, the key one is that you have received a regulatory approval from CMA, who are the regulator for this industry. So we'll be looking at players in the banking space, in the investment banking space, in the stock brokerage space, in the investment advisory space, who have the regulatory licenses to participate in that business. And then the board for EABX is keen on ensuring that the entry costs are very low. In fact, there's also a discussion on how do we incentivize players for the initial first or second years to come on board. So that's the thinking.
Okay. Yeah. Okay. Interesting. There is the concern, and I had a chat with the chief executive of the Nairobi Securities Exchange, that there could be a pricing differential here, disparity, if I could say, because we have the NSE and we use the yield curve generated from there to analyze our bonds. But here we have EABX now coming. And the question is, how do we harmonize these two for us who are market watchers?
You know my background. I'm here because I stood on Jeff's shoulders, right? So the idea is to make sure that this entity and other market players in the industry work together, right? It's not to work in isolation. It doesn't work that way. Ultimately, financial products and markets are interlinked, and so we would like to work together with existing market infrastructure players. again, as I had mentioned earlier, the idea is to ensure that we have the right market transparency on pre-trade, on trade and post-trade, right? And if we are then able to drive the liquidity, we're able to ensure we have the right systems, and we're able then to disseminate the right data and information, which then could, set the benchmarks and set the pricing for, for future transactions. That's the initial thought process. We haven't gotten to the stage where we are discussing, are we going to issue a different yield curve or work on the existing one? No. But if you have a whole pool of assets going through our platform, we're obligated to set some benchmarks based on what we're seeing through our platform, right? And I guess that would be the intention when we go live. Okay.
Still on concerns around NSE versus EABX, so the complementary roles the two should play. NSE already has the provision for OTC fixed income transactions. The question is, are we reinventing the wheel with the EABX?
Let me not say that we are reinventing the wheel. Let me say that there's a demand. The discussion to set up EABX is, or an entity of this nature, is very long in the charts, right? I think as far back as 2008 or 2009, and there was always, a need to address, the fixed income players, the interest rate players, and to have an entity that addresses their key concerns, and that's what EABX now is coming to fruition, based on very many discussions with different players. And if you look at the capital markets master plan, there's actually a discussion around setting up an entity like this. So this is in line with those thoughts over more than a decade coming into play, and I guess then now it's to make sure that we are literally addressing the needs of the market up to what the concerns have been along with it. How do we address pre-trade? How do we address trade? And how do we ensure that the post-trade settlement processes are going as efficiently as possible? And then there's, of course, one or two asset classes that are not on screen, or are on screen but in a very minute way, and how to formalize that and bring it on screen. And so, those are the conversations we're having, and hopefully, we get the right support from the market players, and of course, we get the sign-offs from the regulators.
And that point by Terence takes us to a short break. We shall be back with a lot more on this conversation, focusing on EABX. Stay tuned. Welcome back to this conversation on Business Redefined. We are hosting Terence Adembesa, the Chief Executive Officer of the East African Bond Exchange, that's EABX. Welcome back on set. Terence, you've taken up this role at a time when there are fundamental reforms happening in the fixed income space, specifically speaking to the IMF program with Kenya, which has fleshed out a number of issues. Let me start with this one. This market doesn't have an auction calendar, and I'd like to get your thoughts as to what this would mean and how, as EABX, you could play a role in catalyzing the realization of this.
Yeah, so ideally, EABX, as any market infrastructure, will have to plug into the existing regulatory and policy framework. So our engagements with the regulators, our engagements with Treasury, to ensure that we are supporting or we are advising around a number of these initiatives towards growing the industry. So far so good. One of the initial things we've done is that we have a Treasury, a representative from Treasury on our board, from the National Debt Office, and so of course part of the our interactions with the market and us facing, the market and the regulator is to bridge, the thoughts from the market and the National Treasury, the regulator. So a discussion around how do we, space out, how do we roll over debt, how do we ensure there's a calendar, those are discussions now that, we'll facilitate between the market and the regulator.
All right, thanks for that. And are there any incentives you are considering maybe to woo participants into this market?
Yes, as I mentioned, remember earlier, of course, the regulator requires that before you participate, you're signed off by them, right? So the players would still require to get regulatory licenses. We don't intend to, make the onboarding costs very high. So that will be low. There'll be a low fee in terms of an annual fee to participate. But also the board is considering a waiver for early, the early birds, the players who are keen on signing on right from the initial start. So those are some of the thoughts we are having initially.
Okay. And in terms of your securities profile, how do you envision it looking? The expectation that market sounded here is that we are expecting a lot of government paper. What about corporate debt? Is EABX looking into that space as well?
Definitely. So we'll start with government paper, both the T-bills and the T-bonds. We want to look into the repo space. On both the T-bills and T-bonds, we want to look at two-way markets, the request for quotes markets, initially in Kenya, and then hopefully roll this off to the region. So, that's the initial thought process.
Speaking about the region, and the name is East African Bond Exchange, curious about this. If you look at a market like Uganda, fixed income is largely driven by Bank of Uganda in terms of activity, participation, and everything. Kenya, not as quite. So how do you see this regional dynamics playing out when we talk about now a single exchange platform here?
I guess the concern really is, in the exchange business, just like in the discussions around regional bodies, is how do you standardize? How do you standardize how things are done? So, Uganda have a primary lending activities. I remember in my previous life we had investors talking highly about how Uganda runs its fixed income securities. Would want to borrow and then, of course, share lessons from our side on what has worked and what hasn't worked. We are seeing a lot of Kenyan entities playing in the region, so that should make it easier in terms of interactions between our local players and the players or the regulators in those different markets. But we also know there's discussions towards developing those markets. Rwanda is working on establishing a fixed income market. Burundi is working on putting together a securities exchange.
Tanzania is coming up. Actually.
Tanzania is coming up. Even in Uganda, AltX, the other exchange, is doing a lot of work in the fixed income space. So our work is cut out on how do we work with all those players in all those different markets, and then how do we standardize? How do we standardize all of the activity in the region?
Okay. And maybe it might be too early to ask this, but have you reached out to them to begin these conversations, or how far are you?
Not yet. It's still very nascent. The discussions are still very nascent as of now.
Let me just take you back to the conversation around corporate debt. And there is a view that, and understandably, in the recent past, of course, the sweet spot at the exchange has been the issuances we've seen from corporates. And with EABX now coming and potentially also rolling out a provision for the same, is there a risk of stealing that thunder from the exchange? and sorry for looking like we're pushing this narrative of EABX versus, but it's just concerns we're getting from market participants about all this. Yeah.
Again, our market depth liquidity is very thin, right? And the cake is fundamentally very large. right? We're just scrapping a little bit of it, and our work is to develop the industry, develop the markets, and hopefully that those that development passes through to how, you know, our retail products are priced, or our corporate debt products are priced, and that's the intention. You know, it's not to try and, you know, carve off an existing piece of cake. No, it's how do we grow the existing, how do we grow the unrealized potential that we have in the industry. Yeah.
Kenya, from a capital market standpoint, and you know this very well, has struggled with uptake. So we roll out good products, derivatives, ETFs, name them, Reits. Uptake is always a problem. As the CEO of EABX, what are your thoughts around what can be done around this, especially now that you're coming up with a very new platform?
Ultimately, we have to do a lot of work in terms of training our industry players and raising their awareness for new products and what new products can do. You know, as we, you know, as the years roll by, we are seeing a whole pool of institutional cash growing, right? Look at how fast the pension industry is growing in terms of collected funds. Look at all these new bodies that are coming in place, new funds coming in place. You know, there's now the civil service annuation scheme. There's a whole pool of cash coming, and it'll be chasing different assets. And it's important that also that, you know, as our corporates are growing, or that there's different risk products that are rolled out for them. And you know, so we have our work cut out as an entire industry, from the regulators to the market infrastructure players, to educate and to raise the awareness on new products. And there's room, you know, there's room for awareness. You know, we never stop to learn, and we are happy to be the bridge between, you know, bringing global best practice and what is happening in even markets that we aspire to be, and bringing them on shore, and, you know, just having our locals, our local players rubbing off or learning from those players.
Okay. Speaking about the fund managers, many times I have this conversation with a number of them, and they will tell you we have investment policies, which convincing trustees to begin changing seems to be a headache. What would be your thoughts around how to go about this? Because that seems to be the key hurdle we are facing here. If you look at the industry statistics, out of about 1.4 trillion shillings assets under management, the huge chunk are in fixed income. Yeah. And I mean government paper, you know. Yeah. Thoughts around that?
Well, again, it goes back to awareness, right? And training and awareness. If I'm an asset owner, I would not approve my fund manager to invest in an asset that I don't understand, right? And so we, you know, as an industry collectively, we have to train. We have to ensure that, you know, the asset owners understand what are these products, how do these products work, how do they diversify my investments, and what are the kind of returns that, you know, you know, they potentially could bring to our fund. So those are the conversations that are happening and will continue to happen as the pooled funds grow. And of course, you know, in some instances, you even find asset owners who are, you know, very savvy, and they're coming back to their, you know, providers and saying, okay, we've heard about this, talk to us about it. So that's going to happen. It's not as fast as we would like, but it's going to happen. You can see right now the uptake in terms of new asset classes is growing. You know, private equity, investment in private equity, investment in non-listed real estate, collective investment schemes. So it's coming, not as fast as we would like, So we have a whole pool of cash.
But deploying it.
But deploying it, becomes, we want to understand where is the money getting deployed? What is it doing? So that takes time. It's going to take time, but we're going to get there.
Let's get to the tail end of this conversation, Terence. I was looking at the brief JD there was when this position was advertised, and I saw one of your mandates is engaging the government. Yes. One, I spoke to an industry player who was a little concerned, depending on your history as Chief Business Officer, how does it begin now, pivoting into engaging government, and what new nuances would you bring as far as engaging the government are concerned, because the government is a different ballgame. Yeah.
This industry is highly regulated. It's a highly regulated industry, and a lot of what happens in this industry has interfaced with government and with the regulators. So it's not fundamentally new, right? Maybe it's a higher level now that I'm going to step into, and interacting at much higher levels. But it's the same players that we have to face. We have to interact with to drive policy, to drive changes in the industry, to develop the industry, to develop the economy. Whether it's from National Treasury, whether it's with the National Assembly, whether it's the central bank, the RBA, IRA, CMA, it's the same interactions, across the industry players. So it's not fundamentally different from what other market infrastructure players have done before.
Okay, and maybe on that same vein, are there any policy priorities you see as low-hanging fruit for Kenya to catalyze fixed income activity?
Yeah, I guess the industry has been calling for primary dealership for very long, and from my previous road shows, those discussions around how do we introduce a primary dealership in the industry here. That's going to be something that will engage with the government. How do you roll over? How do you what the issuance calendar looks like? Those are the discussions that we're going to have as an entity with government. So for now, I don't want to say any low hanging. We are in the middle of a change in administration. So a new administration needs to come in. We need to induct them in terms of what has been happening with the industry, and what are the industry's asks going forward. So that's in the next year or so, I think that's going to be the top priority for EABX and for the industry.
Okay. Final question. So how are you supported from a staff technology side? Because of course there are the platforms we use for trading fixed income, and of course you need some staff. So how are you supported on that side?
There's a number of activities that are ongoing right now. We're out in the market looking for a new team. Shortly, once we finalize with the capital raise, we are also running concurrently a process around onboarding new system vendor and the IT infrastructure. We're setting up offices. That's entire process is happening concurrent. So it's a very busy quarter or two coming up. I don't think there's a lack of talent locally. We from a system perspective, from a product perspective, there's a whole depth. From a regulatory and governance and compliance perspective, there's a whole depth of talent. It's just the right level where of the kind of people we want to bring on board to meet the we have tasks to meet in the short term. So you want people who can hit the ground running. Yeah. So
plug and play essentially.
Plug and play essentially. So that's what we'll be looking at.
Okay. Maybe my very final question, and I know I'm overrunning with this. What's your end game with EABX? I know you're just starting, but clearly you have foresight into what you envision this entity being. Yeah.
This entity should play its role as a key market utility, right? Gradually, it should be the key market utility when you're discussing pre-trade, trade, and post-trade efficiencies, right? In terms of settlement, in terms of collateral management, you know, for example, if we're getting into the repo space, are we able to ensure that collateral is taken into account, and so the, you know, our repo transaction is seamless? We should be able then to integrate the same across the region, and if we are then able to, you know, ensure the right data and information is rolling out, so that industry, so that the entire, you know, players in the economy are able to use that data, that information, to, you know, in their pricing of assets. You know, that's the kind of entity we want, that it's playing its right role in the industry, you know, as a market utility. And I think, you know, with the right capitalization, with the right team, with the right systems, we're not inventing the wheel in terms of systems, you know, and there are already existing players in terms of data. So it's to now aggregate all of this. There are already various trading modules in the market. How do we aggregate and bring all of them into one venue? And ideally, that's what I would like to see. Of course, you want an entity that is sustainable, right? It's able to meet its OPEX. It's able to, you know, give a return back to its shareholders, and it's able to play its rightful role in the growth of the economy.
Right, and that point by Terence Adembesa takes us to the close of our conversation, focusing on the newly rolled out EABX, which he has mentioned is still pending the license from the market regulator, so we shall be following up on that. And we shall be continuing to unpack all matters capital markets, so stay tuned to Business Redefined.